Hello, hello, everybody near and far. Good morning, good afternoon, good evening from wherever you're listening from. Thank you, thank you, thank you to our Ram fam. Welcome to another edition of the Fired Up podcast with your host, Susan Gaitan, and my co-host over here, the one and only Michael Renaud, our CEO. How you doing, Michael?
I'm doing awesome. How are you?
I'm doing great. I'm surprised you're not
Yeah.
on a plane, boarding a
I
plane, booking a
just came
flight.
back from New Mexico via Ohio. How's that for traveling in 3 days?
Wait, so
Through
hold on
via
to
Texas.
Ohio.
I had to go to Ohio. I did a great interview with Auto Success magazine. They do like a real studio interview type thing that they do, and we had a great conversation about basically why dealers are throwing garbage at all their marketing. Like they're spending five, six figures every single month, and these reps are like, yeah, I hope you're still in the market. Call me back if you are, like that stuff that we talked about. So it was great stuff. And
Good.
then I got to go see our client, Casa Auto Group, in New Mexico. So I had to fly to El Paso, Texas, and then drive up
Love
about
those
an hour and a
guys.
half. And now it was, I mean, gorgeous. I mean, I've never been to that part of New Mexico. I've never been to Mexico, but I've never been to that part of, and it was awesome. And I'll tell you, man, it's not easy being a dealer group where you are literally surrounded by military bases and government officials. Like
Yeah.
when we're filming this right now, the government shutdown's still on,
Yeah.
and they are struggling, and they created an in-house program of no payments for 90 days. And I just to help out all those military and
Mm.
government families, and it is driving traffic.
I
I don't have to worry
love
about a payment till till after my Christmas credit card bills come in. I'm good, right?
mm.
It's big, and it's one thing where the economy has taken that dip. They created their own in-house creativity and made it work.
Well, today is all about solutions. And I am super excited because we're mixing it up a little bit today. If you're watching this, you might have noticed we've got a gentleman on with us, Mr. Anthony Cappizzano. And I don't want to bring you up. I want to tell him a little bit about you, but then I'm going to let you sort of brag about who you are and what you do and what your organization does for dealers. But Anthony is the Senior Vice President of Axos Bank, their consumer lending division, which, if you think about it today, consumer lending is the topic at every single dealership right now because of the circumstances that we're facing economically right now. Let's face it, they're wary, they're reluctant, they're hesitant. They don't know where they're going to. Some don't even know where they're going to get their next meal. People are keeping hold of that cash in their pocket. And because of that, the dealerships are feeling it. So I want you to tell us a little bit about your role with Axos Bank, Anthony. Thank you for being with us once again.
Yeah, thanks for having me. So
Yeah.
Axos Bank it's a digital bank out of California. We land in all 50 states. But we were born digital. So everything we do is digital. And I run the consumer lending portion of the division, which includes indirect auto and direct auto. So I'm very tuned to auto. I've been in auto for about 30 years, first as a dealership, now as a lender, and I'm in love with that industry. So I really appreciate the time you have invited me to be on your podcast and speak to your listeners.
Well, I think that what you do makes a huge impact, even on the front lines. I work with sales reps and sales managers, and, our biggest struggle right now is how do we get folks into the dealer? How do we, we've got goals, obviously, for ourselves, sales goals that we've got to meet for the end of the year. Quarter four, as you know, is the biggest selling season. And so
Mhm.
right now, though, we're facing some peculiar times, I will say. There's a lot of things going on. Obviously, in the background, we still have inflation and vehicle prices rising. So I'm curious to know. Let's just dive in right now. I know we the three of us have a lot to say, but with everything that's happening right now, the macroeconomics of things, the circumstances that we're seeing around us, inflation, car prices, and just the whole economic uncertainty that's impacting consumers, how is that going to impact profit for dealerships?
Yeah, look, I think it really boils down to cash flow for the family. And I mean the family because most households are dual income, right? Just to survive today. And so what that means is if you look at, inflation, that's ticking up around 3%. But wage growth, it varies by how much you make. But on average, it's about 2.5 to 3.5%. And so really you're not gaining anything there. And people are relatively flat with their income increases versus the inflation increase, right? That's why the Fed's so hard on that number of 2% because it gets you a little bit of an edge, but we haven't accomplished that yet. So I think what the families are experiencing, especially our military personnel and our government workers right now, they're experiencing, no money. That's really hard to have, right? Um, and so cash flow is a real thing. And how that's affecting the dealership is just it's really payment driven. And what I would say by that, I think most dealerships are used to being payment driven. On the near prime and subprime folks, I was saying that there's no better money manager than a subprime customer because they know every penny and where it's going. You
Yep.
know, but I think where the less familiar is on the prime side. So one of the things I'll give an example. One of the things we measure is called AEP. AEP is the excessive payment that people are making over and above their minimum payments on the credit bureau. So we pull the credit bureau, we look at how much money you're making over your minimum payments. That number has been dwindling, right? And it's been dwindling for about in the last 2 years, but really what it's affecting is that near prime and low prime customer. Why that makes a difference is because those customers are used to having other liquidity options such as credit cards and unsecured loans. But as those run out and they have, two or three of those, that's where the squeeze becomes, right? Because they've attained those debts, but they also gain new debts, right? That the medical bills, the food bills, they don't stop. Utility bills, they don't stop, right? So there's really the squeeze in on that cash flow. And so the most critical thing as a dealership is how do I and it's not it hasn't changed, it's just the catalyst has changed. Dealerships have been very payment focused for a while, but the catalyst, speaking to that catalyst so that you can connect with the consumer that's sitting across from you and saying, hey, I know cash flow is important to you, right? You're picking between do I eat or do I drive a car? And that's a really hard decision, right? Because I have to drive in order to eat, right?
Right.
So really that the payment pressure is probably the highest I've seen in quite some time, where it has to be affordable for that family.
That makes sense. And you feel it, you see it everywhere, right? Because it's not just my car payment I'm concerned about in this process. I have a second payment, which is my insurance that's connected to this whole thing. So
Right.
like I'm adding two numbers together right now, and in some places those two numbers might be more than my rent.
That's right.
Yeah.
Right.
That's
And
right.
now all of a sudden, when I put those two numbers together, my car payment is all of a sudden the most expensive monthly payment in my life. And we're approaching that point for not, I mean, not here in New York, not for you
Mhm.
in Los Angeles, Susan,
Yeah.
but where I was in New Mexico, yeah, it could push that 100%.
Listen, a great mentor of mine once told me, Susan, as you go along the path, the career industry career path, just remember that more people buy hamburgers than they buy steaks.
Mhm.
And so what's wild is you're telling me that the people that are feeling the crunch the most are not the subprime folks. They're everyone in the middle, is what you're saying. It's
Yeah.
most consumers that are feeling the crunch, the folks that you think might come in and easily go for that $1,000 payment, but now no.
Right. Exactly. I think there's a dynamic change there between
Yeah.
the appetite of that payment versus before. I think it's affecting the full credit spectrum, to be honestly. I mean, we even see metrics in the super prime where they're affected. And they've been a lot more conscious of that payment where they would have swallowed a $1,500 payment before. Now they're looking, at $1,000. One of the things that made that prevalent is the return of the student loans, right? Student loan costs, and now it's hitting people's paychecks, right? That the average AEP was about for that prime and high prime was about $500 on average. Well, your average student loan cost was about $500. So the wind just got sucked out of their sails if they're trying to make all those payments.
Yep. And
That's
then
just
remember, and if they try skipping on those government payments, on those student loan payments, the government's just going to pull it out of their paycheck. So that
That's
money's
right.
coming out. Like that's money that's out no matter what.
well,
Yep.
and we're not even taking into account the negative equity that some people are racking up. I mean, on top of car prices being higher, on top of inflation, on top of cash flow
Hmm.
decreasing, then you've got people coming back in with cars they bought 2.5 years ago,
Yep.
right?
Yep.
That
Exactly.
were
Yeah.
that they paid 10 grand over sticker for. So
Well, I think because of that, right?
yeah.
I think what we've seen in the data is that more people are holding on. So we're building a pent-up demand even right now. Even though car sales are tracking well this year, right? Very well. Um, we still have a pent-up demand. We know that because RO, repair orders, those have been increasing.
Mm,
And as we see the ebbs and flows of auto, I've been through it for a long time. When sales are down, repair orders go up. When repair orders go down, guess what? The sales goes up. It's this
Right.
teeter-totter.
they're
And
holding on to their
so
cars longer, basically.
Well, and these
they
cars are
are.
lasting longer. They're cheaper to remember. I don't have to come for an oil change every 3 months anymore. That's forgotten.
Hmm.
We're now at
Mhm.
6 months for oil changes. Some brands are a
Yeah,
year,
Yeah,
BMWs are a year, right?
yeah,
yeah.
yeah.
Now with the synthetic oil too. Yeah.
Right.
Wow. Okay. So, which is crazy. I just bought a car and I was in the market for way too long because I couldn't find a payment that was reasonable.
Hmm. Right.
And this was my second car, the second car in my fleet because I gave my first car to my daughter, and so I thought, let me just get myself a little commuter car to ride around in the city. Do you know how difficult it was to find something under 500, something practical under 500 a month?
Yeah.
I just, it just blows my mind. And meanwhile, I discovered that friends were easily paying 1,000, 1,200, and I'm going, what? I don't get it. But so here's my next question. With all of these shifts and everything that we're talking about, what's the biggest economic headwind that dealers are facing or are going to face? What they should be preparing for?
Yeah. Look, I think it depends on your core customer base.
Uh,
I can only talk to the macro, but like I'll give you an example. I was in the Marine Corps, and the dealerships outside of Camp Lejeune, North Carolina, they live off that base. And if when money's constrained or they're not being paid, thank God the military, active military now being paid because they diverted funds, but it was still about a month that they weren't getting paid. And who knows what happens we haven't got to the end of this story yet, but
No, because
those
those
dealers
funds are trying to dry up.
mhm.
those dealerships are going to feel a different pain than other dealerships that aren't pulling their demographic from bases. But I would say at the macro level, some of the roadblocks that they're going to face is obviously affordability.
Uh,
Um, you've seen probably new cars prices are still increasing at that 3 to 5% on average. It's not like back when it was in 2020 where we saw a spike because of pent up demand and at 17% one year, which was a shocker. But it didn't go backwards, guys. So it keeps climbing,
yeah.
and no, it keeps climbing is that monthly payment as well. So I think consumers will go more towards used cars until they see some rate relief. But I
Mm,
will say at the macro level, we did see 25 pip decrease. Some banks do what's called off cycle decreases when the Fed doesn't decrease. Some banks did decrease, and that's depending on their cost of funds and other things. But And in general, it goes along with that. So we saw a 25 pip decrease. That's like stopping around with a fly swatter. That's not going to help anyone anytime soon. You're going to have to see at least 100 to 200 pips to really have that consumer really feel it. Um,
Yep.
I think that the following year we'll probably see one more 25 bip decrease. The following year, Q1, Q2, 2026, we should see some additional relief. But guys, it's not coming in a large chunk. So we're gonna be here for a bit,
Yep.
and we still got to sell cars, and we still got to move metal. So that means you need a different relief valve, right? Because I promise you, the manufacturers aren't going to get cheaper on their cars. All right.
No.
So, right.
And you just
So,
made interest rates a little cheaper for them,
exactly. And
right?
what
They're not
happens
going to
when,
pass that through.
no. So, what happens is you need that relief valve to make it more affordable for your customer. Thus, we've seen a steep increase in 84 months. We've seen a steep increase in leases. I think you should expect more incentivized leases coming out from manufacturers so they can move metal, especially at the end of the year, as we always do. But more so now with all this additional pressure. I also think that you should really look at alternative solutions like 96 months. For example,
Yes.
Axos, we offer 96 months, and that's and we can talk about it a little bit later on when you're ready. But I think 96 months is a very effective way because it beats most leases that aren't incentivized on the payment. And let's say it's $50. Well, that's $50 of room between a yes and a no, or that's $50
Yes.
between selling a back end product or not selling a back end product, right? And it makes a difference, and that's how tight the cash flow scenarios are in
Yes.
households today.
Right. And that $50 is the difference between us eating ramen and maybe
Right,
Chef Boyardee. Like that, but that's where people are. Or am I going to take my medicine this week or not? Right.
right, right.
So people are getting to that place. Not everybody. And then you have other people on the other spectrum, right? That are doing that have a whole other thing going on. But the population that's feeling this right now, that 96 months is a place that is, again, these cars last longer. It's not like I'm putting someone in a car made in 2000 in the year
Hmm.
2000 into a 96-month term. This car's going to last.
Yeah,
Yeah, it's fascinating to me because the conversations 10 years ago, when you even brought up a 96-month lease, instinctively you're starting to think about, your equity in the car.
hmm
It brings me back to this conversation you and I were having just before we started of the fact that cars are not seen as an asset anymore. It
right.
is a depreciating asset and it should be seen as one. And this is exactly what's happening is the person on the other side is going, no, it's okay. I don't mind. I'm not thinking about turning the car back. I just want the cheapest possible price to pay for that vehicle expense.
Yeah, I
And
think that's very valid. I would add to that
yeah.
I think when people are thinking about leases from a
Mhm,
dealership's perspective, because I used to be a dealer, from
mhm,
a dealership's perspective, the thought process I had before I saw the data was that I don't want to put someone else out for that long, right?
mhm,
84 months or 96 months. Back then it was
mhm,
84. And when you actually become a lender and you can see the internal data, what you'll see is like, you have most leases are 36-month leases, right? But at 84 months is about 42 months at weighted average life. So on average, 50% of your customers are going to pay off within 42 months.
mhm.
96 months is only 44 months.
Those are those overpayments you're talking about.
Yeah, so that's when most customers are going to come back into your dealership and they'll have enough equity and they'll be fine. They'll be able to trade out of it no problem
Mhm,
because these are simple just contracts. And so there really isn't much difference between doing a lease and doing 96 months. And I think that most dealerships don't have that data to lean on because they're not a lender.
mhm,
So I try to educate dealerships that I have, and I have the pleasure of working with, saying, "Hey, listen, you're actually not keeping them out much longer. They're coming back here about the same amount of time. The difference is you don't have those contention points as you may have with a lease. A lease, you have, you could have penalties. You could, if the damage, they have to pay for the
Right.
damage, right? You have mileage,
Dispo fees.
penalties.
Yeah.
Yeah. You have restocking fees. There's all sorts of things you have with a lease that can be inhibitive of them buying another car from you, right?
Mhm.
Because you're delivering the bad news. You don't have to deliver it. You skip that with 96 months.
Yeah, you do, unless you're already planning on buying it out, which is what I do. And I look for
Right.
a good residual, a good money factor, and I go, okay, all right, we're just going to keep this. And I make sure that I, love it enough to keep it. But
Right.
I think there's probably a whole group of people who do that. But there's also, folks that, like you said, they're reluctant, maybe because they're unfamiliar with all of that, maybe because they're putting,
Hmm.
we've got a girl on the team that lives in Wyoming, somewhere in Wyoming, and to get to the market, she's got to drive 100 miles,
Right.
So, like it doesn't work for everybody, but what you're saying is important, that people are looking for these solutions to decrease that monthly expense. So this could be a conversation that you could bring to the table and possibly educate your consumers about.
100%.
Exactly. No,
Go
no,
ahead,
go,
Michael.
go, go. No, no, you go, Anthony.
Another thing I wanted to bring up was to your earlier point is you
Mhm.
asked for what's affecting dealerships. I think what you've seen in the last, I don't know, 18 months, you've seen a lot of longtime lenders, flagship, ACC, and other subprime lenders just pull out of the market.
Right.
Now, that's going to affect sales. If you have a heavy subprime or near prime market, because they're the main purchaser of those. Now, I think other lenders will step in and they'll suck up some of it, but not all of it. So that means again, that's creating pent-up demand. So you think this year's good. Wait till next year. I think next year is going to be much better given,
Hmm.
I mean, barring any macroeconomics or wars or anything like that. I think
Mhm.
next year is going to be very good because of the pent-up demand.
Mhm.
Yeah. Yeah. I think, and again, all of these pieces, all of these components, everything you've talked about today is that problem solving that the customer needs right now from a professional, right?
Yeah.
Yeah.
That I need a professional to help me. And salespeople need to be educated in how we pitch a 96 month or how we pitch a lease or how we, again, they're not pitching it to the customer in the box, but they gotta get the customer prepared and ready to have that conversation in the box, right? They have to open up their thing. They show it on the quotes when we're in the showroom, right? And explaining it, walking them through and showing them, hey, now you got an extra $50 in your pocket that you didn't have before. You
Hmm.
can go this way if you're really adamant, great, I'll give you a 36-month loan, but you're going to pay for
Right.
it.
I think a customer, I used to say to my sales associates in my dealership was that a customer's not going to listen to you until they believe you're empathetic to them.
Mm.
That's a great one.
Yeah.
Once you gain empathy, then they're going to start listening to you, educating them, and then they will trust you. And
Yes.
so first seek empathy, then they're going to start listening to you like, hey, let's talk about a lease versus 96 months.
Right.
Is that the best option for you? Like, let's dive into, right? Before you even do the exploratory, these are the nuggets that we're giving you today to say, hey, here's how you build empathy. You build empathy by understanding, like putting yourself in their shoes. You're saying, I know cash flow is an issue today. It's an issue for me. That's building empathy, right? Those sort of steps and this data, sharing this data with them that they don't have, privy to. I think it's going to help build that empathy so that they listen to you and you actually sell them the car that they need and want.
I love that. It always comes down to how you made the customer feel in those first conversations. So, with that
Hmm.
said, I'm curious to know, you guys are making me think of the conversations that are being really twofold. The conversations that are being had in the finance office and how those have changed, right?
Yep. Oh yeah.
With the longer lease terms, with the possible increase in leasing and, the cash flow crunch. But I also am curious to know how it should change on the front lines with leads and with phone sales calls, and all that stuff. So first in the finance office, how has all of this changed the conversations in there?
Yeah. So first I would say the conversation is changing because in F&I, if you've ever sat in the box, which I have, you're typically bumping in payment,
Mhm.
especially if you want to sell something on the back end to help
Yeah.
protect the customer. So
Mhm.
And that's a more difficult job today, right, than it was yesterday. And because of that cash flow, right? The cash flow constraints.
Mhm.
So any tools to help you, you're not going to be able to explain yourself out of this, guys. You're not going to be able to sell yourself out of this. They have only so much cash. So you need to have to offer real solutions like 96 months. You need to break your thought process and say, I only do this or I only do that, and really open it up to other options such as, leasing, look at incentivized leases, look at 96 months now that you know, and 84 months now that you know that the weighted average life isn't much more. Look at that interaction with customers turning in a lease, right? Because you can even if they turn the lease in, they're buying it like you said, they're buying it, right? Well, we do 96 months on a Ford Model T, right? So I can
Uh,
do any year, I do any year
That's cool.
in any model. I'm buying the customer. That's the difference
Yep.
between me. And so even when they're buying out that residual, I can do that for 96 months. And that's going to make the difference. Then you can protect that car. Then you can do these things to help that customer out. But you have to look at your lenders, your book of lenders, and say, all right, again, today, not because we all assume we know, but as everyone changes, so do lenders. So look at lenders today and say, where do they fit? How can they help me
mhm.
with cash flow for my customer?
That's the ticket. That's the
Yeah,
ticket. And then the bonus is that there may be more gross to be made in the back,
100%. We're not working for free. We
right?
what we're here to do is to deliver the best value for the customer
Mhm.
in the most affordable way. And where those two things meet, that's your job in the box.
I'm also talking about warranty and stuff. I mean, with
Yeah.
the longer uh, terms now, you, people are probably open to that maintenance package that you're selling, right?
Yeah, so we talked about that earlier, and I
Mhm.
think that was a very valid thing. I'd
Mhm.
be looking for cash flow to say, hey, listen, let me take out oil changes for you. Yes, they're
Mhm.
longer. Okay, but there's other maintenance behind besides that, right? That this covers. You don't have to worry that for 3 years. Don't even worry. We'll pay it up front. We'll finance it, make it part of your payment, and you're not going to see that expense. That's going to be a differentiator. I'd be selling maintenance packages out my wazoo right now, because it's going to hit
Yeah,
home, I
let me
think.
take the stress out of your life so that you don't have to worry
Exactly.
down the line. Yeah, yeah. Well, okay, so with that said, now we like to think of ourselves as experts in giving folks a strategy, a word track, right? Giving
Right.
sales professionals the words to use when it comes to driving that traffic in. Now we're talking all these solutions right out of the finance office, but when it comes to the front line, Michael just sat with this group in New Mexico, literally shoulder to shoulder with the BDC.
Mm.
And, it's a struggle to get our front lines to communicate everything we want them to, right?
Of
So,
course.
what can we do to empower those folks that are having those conversations? What can we give them? What words, what phrases, what should they be saying right now to drive that
Mm.
customer in?
Yeah, I think word tracks are very important, but I also
Mhm.
think you need to own them completely. So I
Mm,
always tell my folks is, hey, take the nuggets of gold that you've heard on this podcast today,
yeah.
make them yours and make it consistent.
Yes.
Because if you
Love
make
that.
it yours and you make it consistent, you're going to have consistent results.
Hmm.
So
Just
you should be
sprinkle it in, basically, with
just sprinkle it in. But make it consistent
yeah.
messaging, right? So I would be talking about cash flow. I would be talking about, hey, when you're qualifying a customer, be empathetic. Are things tighter that today than they were yesterday? Because I know they were for me, right? So I'm making it personal. They don't even have to answer. If you answer for them, that's going to help them, right? And then go down that word track and say, listen, we've got some great options here where you could attain that X payment you were looking for and get the vehicle that you want fully
Mm.
protected, right? You tie it all in like that, and I think, and it's all very true. Your job is to get them in the store, get them addicted to the car. They should be licking the paint off that thing, right? And then
Yep.
and then the financing options is is what's going to send it home. But you have the tools now. And if you don't have the tools, you better get Axos to sign us up.
Well, we're going to talk about how to connect with you. But basically, what I'm hearing is if I'm on the phone with a customer, I've got these strategies that I use, whether it's, hey, I've got a huge inventory changes daily. So biggest concern is going to be narrowing down your option to just one, or maybe it's, we've got an incredible team here. Wait until you come in, family owned, whatever it is. But adding the verbiage, something along the lines of, wait till you come in here. We've got an incredible finance team here with several options to help families, especially right now, that want to increase their monthly cash flow. There's several options that we can present to you so that you're making the best decision for you and your family. Something along those lines, possibly.
Good job. You've done this
Right?
before. It's
Did
not
I
your
just
first
really-
rodeo.
It's not her first rodeo.
Well done.
But listen, who's saying something like that? I think most of us are on autopilot and we're trying to make something happen. We're trying to find, the gold buried in there when it could be sitting right up top. And it's just a matter of what we're saying to engage that customer with empathy, like you said.
Yep. I agree.
Awesome. Michael, any last comments? I know.
I think the most important thing that we can leave everyone with is you need tools in your arsenal to help solve customers' problems. And when you have banks that give you those options on the table to even forget about 96 months, I'll even, I don't know, you got that Model T, I'll finance that thing for you. I mean, there's nothing that will make them blink or flinch. Those are the partners that you need to help solve those problems, to help you grow, from training to finance to everywhere else and everywhere in between inside the delership. So yeah,
I want to partner with you. I don't even have a dealer.
Well, I will. You said something very, 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 very well, which was, talk to your lenders. See what options are out there to help you get these customers. So, for example, if my dealerships are calling me and saying, "Hey, I need 90 days," by the way, we do 90 days of first payment anyway. So that's just an option with our regular program.
Right. That's awesome.
But you ever forget? I do. And so what happens is, as a dealer, especially if you're F&I, you think you know the program, but that's why I asked you to go look at it again. And if it's not a part of their program and you like the lender, ask. See if they can do it. Because maybe they say yes. Because it's not just you that's feeling this. Lenders are feeling this as well.
Oh, yeah. Oh, I bet. Okay, so on that note, how do we get in touch with Anthony and the team at Axos? Now, I know I was given some information. We're actually going to pop it into the screen right here. So you guys at home, if you are watching on YouTube, you can go ahead and grab the information here. But Anthony, for those that are listening, how can we get a hold of you and your team, possibly connect you and your services with the dealership team?
Yeah, the most effective way is actually on the screen right now, which is reaching out to axosbank.com/auto. And it takes maybe 20 seconds to fill out the little form. We see that in real time. So we respond very, very quickly to those, and we'll have one of our dealer relationship managers reach out to you very quickly.
That's great.
Beautiful. I love it. I love the solution. Such great conversation. This does not get talked about enough. And so I am proud, and I'm proud of this conversation that we're having, and I'm so grateful for Anthony joining us today. Hopefully we see you again, have maybe a little follow-up conversation with you down the line. But again, folks, please connect with him. Even if you've got questions, even if you're not sure, maybe you don't work in finance, maybe you are in finance and you're not the person to make these decisions, pass the information along to the right people. And all of these things are going to help you see, obviously, an increase in traffic and overall car volume. So thanks once again, Michael. Thank you so much. I'm going to see you in a couple of days in Florida. Anthony, have a wonderful weekend. And
Thank you.
We'll see you folks later. Thanks, Ram Fam.
Thanks for having me.
Bye, guys.
Bye, guys. Thank you.